Hey, what's going on? Welcome back to the channel. My name is Hazeeq, and in this video we're going to be taking a look at Agix. I do want to say that I'm not a financial advisor. You should do your own research before investing money into crypto. Now let's jump straight into the charts. Taking a look at the daily, you can see that Agix is supposedly here trying to start something, some sort of an uptrend. Depends on if we can break above this April high. If not, we might be in this sideways channel for a while. And for those of you who are looking to accumulate, maybe this is a good time to start buying some tokens. Now, I understand for some of you this may be too expensive already. It is too expensive for me. We got into this project way back at 25 cents on Patreon, as you can see, and we're not dollar cost averaging into this because it's way too high for us. We're gonna sit with what we have, and if it dips down to a certain level, we'll start buying more, and obviously the patrons will be advised first. Now let's identify a major support level here, and let's see what's going on with this coin here. So what we can do is we can add a nice support block, and it's going to be based on this touch that we had back in February 2024, and then this touch in April, so last month. So this zone is a really strong support block that we have, and we've been retesting it throughout 2024 between 73 cents down to 66.5 cents. And as you can see here and there, we do have wicks below it, but the important thing is that the candles always close somewhere in this purple area. And that's what we could have the next time we have a correction. We could land into the zone, and that is going to be a really good buying opportunity. If, for example, this is too expensive for you right now, you might want to set up some buy limit orders at around about 73 cents and lower, in case we have, maybe a quick capitulation, a flash crash like we had here in April. So make sure you have those set up if you have some spare cash flowing around. Now you can see that there is a pretty strong resistance level as well. So there is this resistance. As you can see, we held it as support previously. That's going to be 98 cents, 98.5 cents. So we held that as support back here in March, and then we dumped below it in April. We had a back test of resistance in April, and then another back test here in May. So this is going to be a pretty strong resistance level for us to get through. What we can do is we can set up a Fibonacci retracement just to see how far we've gone and what can we expect down the line. Okay, so we haven't even gone down to the 0.5. That would be a good level for us to retest on the way down. And then you have the golden ratio here at 48 cents. I don't know if we're going to be able to drop down that low. From the current prices, that's a 48% retracement. And from the local top, that would be a 67% retracement. I'm not saying it's impossible. I'm just saying that's not very likely. We'd have to lose this major purple block, and we'd have to lose the 0.5. And those look to be really good areas of support. This is based on this previous touch from March 2023. As you can see, it lines up quite nicely with the 0.5. And then we have this entire wick, which shows us that there is strength below the purple block. So people keep buying up the token as soon as the price drops below the purple block. Taking a look at the RSI, you can see we're slowly retracing from this bottom that we printed in April 2024, and we're trying to do something, but really we're not doing anything significant right now. So we're holding the 20 EMA here. That's good to see. If we end up losing it, we might start dropping back down to the purple block, like I said. What we can also do is add another fib here, and let's just try to do that. We can add another fib, and you can take a look at the golden ratio here, sitting at 75 cents. We had a few bounces from that area, and then you have the 786, which is in this purple block here. But let's switch over to the weekly chart so we can take a look at what's going on long term. And before we continue with the video, I want to give a quick shout out to my Patreon. If you're interested in getting more exclusive content, you want to support me as a creator, and you like what you're seeing here on YouTube and you want more,
feel free to check out the Patreon. That's definitely a place for you. There's a 7-day free trial, which means you can get access to all of my content since the inception of the page. So that means you get podcasts, low cap gems, technical analysis, project reviews, and a whole bunch of other stuff. We try to do posts there on a daily basis. We cover airdrops and a lot of stuff that we don't really cover on YouTube because we don't have as much time. And of course, because patrons get more stuff and more content. And if you're interested in that, the link is down below in the description. Thank you all. Let's continue on with the video.
Taking a look at the weekly chart, as you can see, we have broken out of this massive symmetrical triangle here. And that was really good. Obviously, you always want to break out of these patterns and you don't necessarily want to come back down and get back right into them, which some projects have done already. Now, we're also holding the 20 EMA, which is very important. This is a really good sign here, showing us strength and showing us that the 20 EMA indeed is your bull market support band. And we also have a support level, there we go, yeah, from there at 95-ish cents. So as long as we're holding the 20 EMA, that's all good. I would even love to come back down to, you know, let's say the 20 EMA at 80 cents and just consolidate there for a bit until the 55 EMA catches up, just so we can remove this gap in between the EMAs, because that's not very healthy, if I'm being honest. Whenever we have these gaps, we typically see corrections. Now, we haven't seen that massive drop below the 20 EMA, which we did see over here. As you can see, once you come back down, after you have such a massive move to the upside, you lose the 20 as support and then you continue downwards. So is it going to play out the exact same way it did in 2023? We don't know, but I do know that once the EMAs can catch up, we're going to have a much healthier uptrend moving forward. So that's what we're going to be hoping for. Now, worst case scenario, what could happen is that we're going to see a retracement back to the purple trend line there, or to the pink trend line, and we're going to retest it as support, because this was our resistance back in 2021, in 2023, and now we could have another move back down just to confirm it after we broke above it. Of course, that's, you know, something that we get a lot on our charts. We have a break of resistance and then a back test of support for confirmation. Taking a look at the RSI, as you can see, we're still in the upper areas there, sitting at almost 62. The stochastic hasn't retraced down much, and then we can see the volume has picked up and spiked massively. And this looks very similar to what we saw back during the AI hype in 2023 at the start of the year. And we had the exact same thing play out at the start of the year here in 2024. And then it looks like we're, you know, trying to print another bearish cross like we did back in April 2023 after that massive move to the upside. So the big question here, if we print the bearish cross, are we going to see the exact same story where we dump down to the 200 EMA and from there we have a bounce? So the 200 EMA right now is sitting all the way down here at 26 cents. Do we want to see the price come back down that low? Personally, no. I would not like to see that, because obviously we do want to see our coins doing well. But can it happen? Absolutely. There's nothing that's going to stop me from saying it can happen, because if we have a flash crash, a black swan event, another war breaking out, another virus, whatever it may be, we could have a massive crash. Now look at this crash we had in 2020. So from this high, we went down 80% just out of the blue. So imagine an 80% crash here is going to take us down to 28 cents, roughly the 200 EMA. Once again, anything is possible. Make sure to have some money on the sidelines, as always, in case we have these black swan events occurring. So once we have the RSI back down here in this blue block, and once the stochastic is below the index of 20, maybe look at some buying opportunities. At that point, the price could have potentially retraced back down to the 55 EMA, which is going to be a really good entry point if that does happen. But as of right now, in my opinion, it's a bit too expensive, especially if you don't have any coins right now. I would not be getting into AGIX at the current prices. But that's just my opinion. Let me know what you think. Let me know if you are buying the current prices, and let me know what are your targets to the upside. Thank you all for watching this video. Stay safe and take care.